Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And holy moly guys, look at that beautiful hard rejection from the top of that bear flag. Beautiful rejection guys. I can't wait to talk to you guys about today's price action. But before we get to the price action, you guys know we had FOMC today. I don't think it disappointed. Some people might be disappointed, but I don't think it disappointed. Great price action. But, you know, we got some remarks from Powell here when he was speaking. Participants don't see rate cuts this year. We considered pause, but the hike was supported by a strong consensus. All right, and got here. Recent banking events might result in tighter credit conditions. That would impact the economy and how we need to respond, obviously. And apparently the market did not like those remarks, and it was a perfect, price action wise, it was just an amazing rejection from the bear flag. Resistant, okay, that's bearish, but I was really hoping we can break out of this chop range, which is this bear flag range, but it wasn't strong enough, so I was definitely wrong about that. But we will see, because while FOMC days are volatile, the day after FOMC can be volatile as well, okay? So definitely going to have to watch out for a reversal tomorrow or follow through after the strong rejection from the bear flag, resistant, follow through by breaking down the support level, okay? Now, if I move my cursor to tomorrow for market open, right, around 9, right? This is a 1 hour chart. The breakdown of the bear flag would be at 392, while the breakout would then be at 402.86. Okay? So if bears, after we got this strong rejection, if bears want to show follow through, we need to break down 392. All right, breakdown of 392 would be a breakdown of the bear flag, and in my opinion would be bearish. Okay, I would definitely enter puts if that happened. Okay, now we're looking at the daily chart. We can also see we got a false breakout setup here based on this yellow trend line. Okay, you see this triangle pattern. This is also the support of this triangle pattern is also the neckline of my head and shoulder pattern. Okay, but we got to talk about the bull case and the bear case. We got to do this unbiasedly. All right. It's looking bearish right now. I will say that. But we still want to be prepared in case the market makers want to mess with us and turn this around on us. All right. So remember, I do bull case scenario and the bear case scenario. Okay. Right now, I will say it does look bearish, but I'm going to give you the bull case scenario and then the bear case scenario just in case. So we trade this unbiasedly. All right. So before I get into that, I want to talk about the 15-minute chart, how I traded the day real quick. All right. So remember that Uncle talked about especially on FOMC. Watch out for the initial reaction. Okay. And then watch out for the false breakout setup or the false breakdown setup, okay? A lot of times with FOMC, the initial reaction is a fake one, all right? Sometimes, how much the market moves is different. It's not always the same. But the context is usually that the first move is a fake one, and then when we get the false breakout or the false breakdown, that's when the reversal happens, and it usually happens when Powell speaks. Today, it worked out very well, in my opinion. It worked out very well. The first breakout we had here, okay, this blue line right here, that is my 400 resistant level. Okay, market was pretty much, market was pretty much chopping between that range. 398 support and 400 resistant. Market was within that range. And on the first setup that we had was a close above 400, and it did hit the next level above at 41.5 to 42 zone that I had. That was top of the bear flag resistant. Okay, and it did. Nice level move. But Look at that. We got the false breakout. We cleared 400 on the 15-minute chart. When it closed above on the 15-minute chart, that's when I considered the level was cleared. And then the next candle, it closed back below on the 15-minute chart. It closed back below 400. That's a false breakout setup. Look how it worked. It worked out beautifully. Okay? So in the last few videos that I talked about FOMC, this is what I mentioned. This is the strategy. This is the plan. Watch out for that fake initial move. And you don't want to call the top. You wait for the false breakout setup or the false breakdown setup. In this case, it was a false breakout. And man, oh man, did it work beautifully. And I really hope that you guys were able to catch it, because that was the point of making the video. Okay? Now on for tomorrow. Bull case scenario. All right? I'm watching that yellow trend line. Okay? Resistance is 395. Okay? I'm around it to 395 with the 50% fib level at 396.5. We need to clear both those levels to be bullish. If it cleared 395, look to long and play it level to level to 396.5. If that level clears 398 and 400 with 401.62, the 402 zone is back in play. And in this yellow trend line, a third touch of it will be at 404.5. Okay? So above 395 is the only way I would be short-term bullish for tomorrow, Thursday's trading. Okay? Now, as long as SPY stays below 395, I am bearish on the SPY. Okay? The 200 daily moving average is at 392.5, and I got that 61.8 fib level at 391.4. Those support levels must clear. All right? Keep in mind, the bear flag support is at 392ish. So below those levels, 391.4 would be bearish. Would be great follow through after today's price action. Would be great follow through for the bears. So break that down. 391.4. Look to short. 390, 388.5 will be back in play with 387 as well. That's a previous pivot low back in January. And then the yearly trend line is at 385.2ish. Okay, we can round it to 385, whatever, but 385.2, which is where it's at, with 384 below. That's a 78.6 fib level. Guys, the reason why I give you these support and resistance level is so you guys know when to short and when to long, or when to buy calls or when to buy puts. You guys got to be able to watch the charts yourselves, okay? Otherwise, I'm just giving you these levels for nothing. So hopefully it's not for nothing, all right? So you guys understand. Below 395, stay bearish. Above 395, maybe we can get bullish again, okay? Okay, you got my levels. Look to long when a resistance clears. Look to short when the support level fails. The way I do it, I use it. All my support resistance levels are based on the daily chart. But I use the 15-minute to 30-minute time frame to trade, to make those intraday moves, and I play it level to level. So good luck tomorrow, guys, if you're trading the SPY. Now, QQQ, after clearing 307 and 309 yesterday, we did manage to hit the 311 target, and we broke a little bit past the February 2nd high, going as high as 315.25 today. But look at that, we broke back below the levels we cleared yesterday. So as long as below 307, that's bearish. That's a false breakout setup. Now the 61.8 fib level is at 303.8. All right. And I also have Fibonacci levels from December low to today's high. So I readjusted it a bit. And the 23.6 fib level is now at 302. Okay. So to show follow through, stay below 307. Break down 303.8 and 302 to be more bearish, okay? 300 and 297 will be in play. Below 297, I got 294, and there is a gap around 290.5-ish, okay? To be bullish, it just needs to recapture 307 and 309 and clear 311. Again, actually close above it to put 315 and 317-ish back in play, all right? IWM, we got a nice strong rejection from the 61.8 fib level. Okay, I have fib level from October low to February high. Strong rejection from the 61.8 fib level, and we broke down my 174.3 level. Okay, as long as below 174.3 with 176.5 highest, I am bearish. Now, based on this structure, the last low was around 170-ish, okay? I'm thinking we're going to break down 170 next. I'm thinking. I could be wrong. But if we break down 170, 168 is in play with 165.7 below and 162.5. That was a low back in October. That will be in play. To be bullish, it needs to recapture 174.3 and especially 176.5 because that's where we got the strong selling pressure from. So to be able to take out those sell orders and close above would be bullish and put 179 and 181 with 185 above back in play, okay? Tesla, it tried to break above that bull flag, couldn't hold above, all right? So as long as below 195.5, stay bearish. We need to see follow through though. I got a fib level at 190.3 and the 20 daily moving average is at 189.4. So if it breaks down those levels, that's bearish. There's a gap at 183 and then the critical support levels at 175.6 and 173.4. Look to short when the support fails. I will only look for calls, or I would recommend looking for calls on Tesla if it can clear 195.5 and break above 200.6. That was today's high, okay? So today's high was where we got selling pressure. So we need to take out that level at 200.6 to show that the selling pressure is gone and there's potential buying pressure coming in. All right. Apple, it tried to clear that 61.8 fib level at 160.5 intraday, but failed to hold. We had an intraday false breakout setup on it. All right. So as long as it's below 160.5, stay bearish. I do need to see it clear some more support, starting with 156.5 and 153.5. Look to short when those support levels fail, putting 150 and 146.6 with 143.7 below. All right. DXY is looking bearish. All right. That's strange. It's okay. Even though the SPY gave us a drop today, DXY also gave us some bearish moves as well. All right. So the next immediate resistance is at 102.7. It needs to recapture that with 103.4 and 104.1 for me to be bullish on the DXY. If it keeps breaking down support, then I'm just going to follow the price action. There is support at 102.1. If that fails, 101.1 and 100.8 is next, okay? The VIX managed to put in a green day. It was bearish at first, but it managed to stay above 21.2. So if it wants to show follow through, all right, you see that long wick. There was some buying pressure. So if it wants to show follow through, it needs to recapture 23.8, 26, and 28 to show that it's bullish. Okay? Let's end this with the option flow. 82% in the puts. All right? This is filtered for 500K premiums or above. We're seeing a lot of block orders coming in. All right? Big size block orders. Here's puts for May 19, 365 strike price. This one is puts. Sweep order, 380 strike price. All right, so a lot of these big orders. This puts for 435 strike price. All right, this is calls for 405 strike price. A lot of these came in the end of the day, 435 strike price. So yeah, in the money puts that we're seeing here, a lot of block orders. Very strange, but yeah, that's what we're seeing. Triple Q. 94% into puts. Seeing a lot of sweeps, good amount of block orders as well, but a lot of puts compared to calls. IWM 93% in the puts. Nothing with big size, but we are seeing a lot more puts compared to calls. Tesla 59% in the calls. All right. So despite the drop today, a little small drop for Tesla, still a lot more calls than puts. Apple, 72% in the puts. Nothing that really sticks out to me. Let's see the VIX, 97% into calls. All right, guys. So thank you guys so much for watching. If you guys want more content from Uncle Charters, please consider joining my Discord. I would love to serve you guys at a higher level. Other than that, thank you guys. Peace.